Hi, I'm Roger Montgomery and welcome to this week's Video Insight. The word bubble conjures up inflated prices that are unsustainable and prone to a correction imminently. The word bubble has been used in the context of Australian bank share prices, which are rallying as investors chase yield. It's true that fads come and go, and we do believe that this is a fad. But it isn't true necessarily that the share prices of banks are about to plunge. ANZ's result shows what's happening in the banks themselves and also to their share prices. ANZ announced a possible increase in its payout ratio, and that has driven demand for its shares. Investors who are unhappy with low returns in their term deposits are turning to shares to look for a better income. But it's now become self-fulfilling. It seems any company that increases its payout ratio, the share price goes up. But when a company generates a high rate of return on equity, increasing the payout ratio can often mean a decline in intrinsic value. Back at the start of this year, we decided to increase our estimate of earnings for the banks. I talked about this on The Business with Ticky Fullerton on the ABC. But even when we suppose an increase in earnings of 10% per annum or more, compared to what analysts were talking about at the time, this is back at the start of the year, of 3 to 4% earnings growth, we still couldn't get intrinsic values up towards the share prices that they were trading at back in February this year. So they're now even more expensive. But do we think prices are imminently going to fall? No, we don't. Look at this chart, which we've shown a little bit earlier, of the Commonwealth Bank of Australia. The Commonwealth Bank of Australia's dividend yield shows that it's been lower than this in the past. It could be that we're getting to the end of this cycle, but it also means that there could be further to go. At the moment, we're not invested in the banks. We think they're too expensive, but that doesn't mean that they're about to fall in price. I look forward to seeing you next week, and don't forget to follow us on Facebook and Twitter.